Welcome back to the channel, ladies and gents. In this video, we're going to take a look at the crypto crash, a load of different perspectives to go through, explain kind of what has actually happened and why we've turned bearish over the last day or so in particular. Of course, this has been going on for a few weeks at this moment in time, but it seems the macro picture means a lot more to these markets than we initially thought. So if you enjoy the content, make sure you subscribe to the channel. Check out the pinned comment down below for FTX and get yourself trading over there. So yesterday we had the Fed minutes. So we had a meeting back at the end of November or early December. I can't quite remember, as crypto is like dog years at this point in time. But released yesterday were the minutes from that previous meeting, the FOMC meeting. And so this was kind of reiterating what we already knew, but we have more quotes, we have more of the discussion topics behind what the Fed were talking about within their meeting. And so even though we already knew the outcome with the potential for rate hikes and the reduction of the Fed buybacks ending in March, well, this kind of reiteration seemingly made the crypto markets go down, and along with it, the stock markets and pretty much global markets in general. So Federal Reserve officials are becoming increasingly concerned about growing inflation and persisting bottlenecks and supply chain issues. Minutes from the 14th to 15th Fed FOMC meeting, so it was towards the middle of December. Economic projections released in September stated the most central bank officials did not anticipate rate hikes until 2023. However, with the new figures to hand and the huge CPI print, the majority of officials now expect 3 rate hikes in 2022. The shift is a hawkish move from the Fed and from Jerome Powell, who for months insisted that bottleneck-induced inflation would ease naturally over time, and he used the word transitory many times as well. The central bank has since backtracked on earlier statements and taken a more aggressive approach to combat higher prices. So this is a quote from Chair Jerome Powell: "We are phasing out our purchases more rapidly because with elevated inflation pressures and a rapidly strengthening labor market, the economy no longer needs increasing amounts of policy support." So this is from Edward Moyer, another analyst. Bitcoin is in desperate need of a catalyst as crypto traders struggle to buy ahead of the beginning of a Fed rate hiking cycle. The cryptoverse remains long-term bullish with Bitcoin and ETH, but short-term downward moves might not yet be over. So that is the macro landscape being printed out for us. And this has had short-term implications, even though this is forward-looking from the minutes from the meeting, and this has not yet come into effect. The markets are always looking forward, and so this has turned things quite bearish here. Fear and greed printing a 15, which is extremely, extremely fearful. So this is back to levels we last saw around May, June, July when we did bottom out. So this is the kind of print that you'll see on the fear and greed index to signify a bottom. Typically, there's mixed consensus online from many analysts, which we'll look at in just a second, whether or not this is now a macro bear structure or whether we are just putting in a lower high in this overall picture of an overall macro bull trend for crypto. So let's look at the chart real quick. So yesterday I was watching this on the 1 minute, which was eventful. And over that period where we had the FOMC meeting minutes coming out, things were really heating up here. It was getting super, super choppy, and then we started to see these big moves down and some huge wicks here, which looked like we could potentially get some cascading liquidation. So I just bring this back out to say the 4-hour chart. So on the 4-hour chart, back in December 4th, there was a huge wick downward. So that just signifies a cascading of liquidations. So this is forced selling. People who were long getting wiped out. This was forced selling. This is not natural selling at this point. And we did have some cascading liquidations here, but nothing huge. There wasn't anything significant here. And if we just go out to a longer time frame again, we didn't quite take out this previous low set on December 4th. So this now marks an area that if we do come and sweep the lows, we may take this around the very low 42,000 region. We're currently at the high end of 42,000, so not far to go. Next level of support pretty much down here at the round 40K region. So what actually occurred? Well, there were liquidations to the tune of almost $900 million, which is pretty insane. But this wasn't a huge cascading liquidation event. But this was not as big as we've previously seen. We've seen multi-billion liquidation events previously. So there's still quite a lot of leverage left in the market. Some suggesting we need to cascade those, take them all out before we can actually resume an uptrend. The total and biggest liquidation in a single account was $10 million. So some unlucky fellow lost 10 million bucks yesterday. And you can see the worst exchange for liquidation was OKX, then Binance there coming in second. So lots of liquidations, and this from Eric Crown, Bitcoin open interest rules the game. And he's been talking about this for a while. I do watch his daily updates. They are quite long, but if you go in and just find out the BTC price action, it's quite useful. But he's been saying this, that as the amount of leverage just keeps going up and up and up, we were literally at all-time high levels, it needs to be wiped at some point. And this typically does result in a price move downwards to wipe out those over leveraged longs, people just aping long positions on BTC, and this is not healthy for the market. So there needs to be a corrective phase. And in fact, Eric has been calling for a sweep of the lows towards the 40K region with a swift wick down before resuming an uptrend. He does believe we're still in a macro bullish structure. Then this from Rect Capital, his analysis on this, looking at the 50-week EMA support line here, which is here, and he's circled it for us. And he's suggesting that this could, by the weekly close, just look like one of the wicks that we saw back in this May period. And he says a recovery back above the blue line, the 50-week EMA, would be bullish as price will have ended as a downside wick like we saw earlier in the year. And so nothing to be too concerned about right now. He frequently talks about the maximum financial opportunity coming at the worst time. So when you're seeing peak fear in the markets, big ugly red days, these kind of periods precede maximum financial opportunity. So if people have the balls to do it, buying at these kind of levels, buying the blood typically works out well. But if you do believe we are in now a bear cycle, of course you don't want to be buying at this point because you would believe prices will go a lot lower. What's Will Clemente saying? He's been very quiet as of late, which in itself was a bit of a sign. Okay, I've started doing some buying here. So he wanted to get back above 53K to resume the kind of up-only bullish structure. We didn't make it, but he did say he will be buying in the low 40s. And now we're here, he's got to start to do so. So we're here, and there's been no follow through from yesterday from the bears. So if open interest was aggressive for longs right now, we would have seen a further cascade of liquidations, which just hasn't come. We haven't seen this big, steep wicks to the downside. So he's suggesting that maybe the bottom could be in and that he started to ladder in some buys. So this from Byzantine General, this is starting to feel very similar to the $30,000 range now. The imbalance between bid and ask is getting crazy. Spot bids keep getting filled with new orders showing up. Meanwhile, ask side fails to repopulate in any meaningful capacity. Within this, he talks about the order book and how you can see the flows, and he reckons there is seller exhaustion right now. He also talks about game theory coming into play. Eventually, someone is going to get impatient and pulls his limit bids up, sets them higher, and then eventually someone else is going to go, right, I'm not going to put my limit order higher, I'm just going to start market buying. So he reckons from looking at the order books here that potentially we have hit a bottom, and he thinks there could be a reversal on the card, but this is just looking at the order books alone and is only taking in that perspective. So as Pentoshi replies, to be fair, this has been said for the entire way down about the order books. Will this time be different? Possibly, but it's far more complicated than order books. Needs more context. Then this from Tech Dev, agreeing with Il Capo here, another trader over on Twitter, who suggests that buying between 40 and 45K is one of the best opportunities of this year. So if you're bullish on the outlook for 2022 in general, maybe we're seeing all of the negatives from the macro being priced in already, and potentially the market has overreacted and it could resume in a more steady incline towards the rest of the year. What you can pretty much garner from all of this is no one really knows. It could go up, could go down, or could go sideways, but it's good to get different perspectives and just think through your own mental model here. And here is a bearish take, but one to actually consider here, because if you've maybe booked a lot of profits, but you haven't taken any out and realized them, well, this could be for you. So I think it's wise on significant bounces to consider removing a good amount of your capital from the market, especially if one, you've already made it, and two, you can't afford to lose it. As stated, I think this year is a year people lose most, if not all, for many reasons that he's laid out previously. So go and check out Pentoshi's thread and Twitter feed for some of his takes there. But if we do get a bounce, which we typically do after a large drawdown, you'll see some nice green numbers over maybe the coming days. if you need to take money off the table, that could be the sensible option for you depending on your financial situation. So this, of course, is to be tailored to each and every person's individual needs. Another stance here from Trader SC, another great trader. Slow grind lower is dangerous. You want to see a really fast move into support. Slower it is, the lower it probably goes. So he's saying we want to see a cascade down, a big wick down, and we can pump back up. If it just grinds down slower and slower and slower, like we saw throughout the summer, it went on for ages. It felt like an eternity, and eventually we go a lot lower than people expect. Now, a different take on the market right now was that it wasn't the FOMC meeting minutes that crashed the price, but it was actually Kazakhstan with 12% of the mining power going out. So you can see some information here. This was from the Martini guy putting this together, but also Odell posted 12% of the Bitcoin hash rate has been disconnected from the network due to the Kazakhstan government cutting internet nationwide in response to anti-government protests. And it did fall off the cliff yesterday. And typically Bitcoin price does follow the hash rate readings. So could this be the main factor, or could this be a contributing factor? I think it could be, well, a contributing factor, but the FOMC and macro market conditions right now also have to have a say here. But if you've seen some of the clips in Kazakhstan, it's pretty troubling that people are just protesting against high inflation in terms of the energy costs. I think gas prices are through the roof due to Russia playing hardball on a political level. And so people have been protesting about this. They can't afford to heat their homes. And the response from the Kazakhstani government has been pretty appalling. You can actually see some of the clips online are probably not safe for work. Some really violent scenes going on, people being shot and God knows what. So this is pretty bad stuff. But this shows you that if the second largest Bitcoin mining nation, because Kazakhstan's next to China and a lot of the Chinese miners move to Kazakhstan, them going offline could be a contributing factor to this overall BTC crash. If we just look at the gas prices here in the UK, 1 year ago we were at 48 and now we're up to 114, so almost a 2.5x there in the gas prices. And imagine in other countries it could be a lot worse. As we have it pretty easy with our governments, you can imagine in other nation states there's going to be absolutely zero support for individuals. So this is another take as to why the crypto markets may have gone down as well. Then back to the curve wars that we've been covering recently, and the Terraform Labs or Luna have accumulated a load of CVX convex tokens, primarily over the last 7 days, getting over 660,000 of them. And it says, based on the proposal linked below, it looks like they're going to ramp things up even more. So this is interesting to look at, as potentially you could have a bit of a bear market, hedge with maybe convex, curve, and these wars, because you're seeing that treasuries are buying up these assets. So even if retail traders bugger off, well, you've got treasuries going for these things, you've got DAOs investing, you've got companies investing. So today, over 80% of all convex has been emitted, and the curve owned by a single convex continues to grow. This is directly from the Agora forum over on Terra Luna. In my last Votium round, Frax provided 7.5 million in Frax incentives for Frax 3 curve, and Abracadabra did 3.1 mil in spell incentives. The Terra community should capitalize on the effectiveness of bribes right now and take this chance to farm as much convex as we can. This is an important long-term strategy, as the convex earned now can forever be used to direct wards to the UST 3 curve pool due to the amount of convex currently out there, 80%. So only 20% more to fight for, so they're saying pretty much go balls to the wall and accumulate as much CVX for the long run as possible. So really interesting to see how this is shaping up. They recently bought 594,000 convex, almost $25 million worth, and locked it as VLCVX. That's vote locked CVX. So the curve wars are in full effect. In terms of Phantom, right now it's just surpassed Avalanche in daily transactions at the start of 2022. As the narrative rotates to Phantom, it's not surprising to see it reflected in transactions. And this from Delphi suggesting capital rotation is taking place due to the fact you can get a nice 30 to 60% APR on stablecoins on Phantom right now. And you can see from the green line here versus the purple, which is AVAX, the green being Phantom, it's recently surpassed Phantom for those transaction volumes. So this is bullish for Phantom in general. If you go over to Liquid Driver, a new protocol that is incentivizing heavily on Phantom right now, there's some great APRs to be had. So if you want to farm some tokens, they're paying out a lot of LQDR, the liquid driver token, as part of these rewards. Let's just have a look at the liquid driver phantom pair here on Spirit. You would get roughly 25% from trading fees, but 120% boosted in a liquid driver token. So worth looking through here if maybe you've got some phantom tokens, you've got some Spirit or whatever, or even just some stables. There's some good stablecoin pools on here as well. There's going to be farming opportunities galore no matter what the market conditions. And second up here, of course, we have Andre Cronje bringing something out with Danielle from Abracadabra, and he just put this tweet out, VE, which is vote escrow, and then 33, which is the ohm symbol. So it seems like there's going to be some form of DAO around vote locking, similar to the Curve Wars. I think Curve's going to be deploying on Phantom, so this could potentially be something to try and command Curve over on the Phantom network. And additionally to this, my speculation is there could be something around Spirit Swap, as again, this is another money market that has emission rewards that can be directed by governance in terms of locking Spirit to in Spirit in a similar way to the gauges over on Curve. Very, very similar stuff. So Spirit could be another one that looks kind of interesting. The price has picked up substantially as Phantom is going up right now. $60 million market cap at this moment in time, and you can see from the gauges over here. So you lock Spirit from 1 month all the way up to a 4-year period, and this gives you more voting power. And you can see the votes at this moment in time. They're directing rewards, these Spirit rewards, towards the Spirit Phantom LP position. So this will probably be either the Phantom Foundation or Spirit themselves controlling a lot of votes. You can see they've got 40% of the votes there, but Liquid Driver coming in with 33% here. ICE, so that'll be Danielle, 12%, Mai here, and Ohm as well getting in the mix, 3%. So my speculation is that there could be something to do with what Andre and Daniel are bringing out with Spirit Swap as well. There could just be generally loads of these DAOs being set up to control votes on various applications on different chains. So this can really upset the rules and mix things up here in crypto land, because this could mean there's just all these DAOs and these treasury models that are trying to govern other protocols and keep buying up their tokens. So this, again, as I mentioned with Curve, could be the kind of strategy we need to look towards throughout a bearish trend, because we haven't got typical retail buying this up. It could be DAOs which are incentivized to just buy, hold, and make a bit of a black hole for these various assets. And let's finish on here. SUPERFARM released this yesterday. Looks like a bit of a sneak peek at their marketplace, an NFT marketplace being dropped soon, hopefully. This will be very good for the Super token, we hope, as many of us have been holding for a long time. They're showing bulk listings available on here, which is something you can't do on OpenSea, so this will be a better user experience on that front. Holidays have us feeling bulky. As we know, the NFT market right now is booming once again, with a load of celebrities buying things, Eminem buying a Bored Ape, for example. And if the NFT sector is heating up, this may be a good opportunity for SUPERFARM to release their marketplace sooner rather than later. So really looking forward to that and potentially seeing a nice uptick in the Super token and potentially earning some yield, as this should be a DAO governed by token holders, and exchange fees should be going back to the token holders as well. So we'll keep up to date as things develop over there. So there we have it, our take on the BTC price action right now, where we are, where we may be going, the kind of perspectives we're seeing from industry leaders there. Drop me a comment down below. Where do you think we're going next? Are we going to bounce here, or do you think we're in a long-term downward bear market at this point? For me, I don't think we're in a bear market. I think we will get a bit of a recovery here. And from the TA that I've been consuming from the likes of Crown, we're still in a macro bullish structure. I think we're just trying to get over all of this macro headwind and factor in that we will get rate hikes and easing of quantitative easing. So drop me a comment down below, subscribe if you're new, and I'll catch you guys in the next one. Goodbye.